In this class we're going to talk about business ethics and look at the responsibility of stakeholders within the business. Ethics is a set of values and rules which define the right and wrong conduct of the business. So it's a set of values or rules. It's what people believe to be right or wrong, and the right and wrong conduct of the business. Ethics means norms, morals, and ideals prevailing in a society. So it relates to what the society believes is the right conduct. Now, of course, this is not universally agreed. Societies may differ. In some societies, headhunting is acceptable. In other societies, that would be seen as wrong. So what are the norms of the society? What is the way which is accepted amongst the society, the proper ways to live? These may vary across societies. So it's a difficult topic to pin down. The way different societies, different cultures live, they have different rules and different ways of seeing the world, and therefore the ethical principles may vary. Essentially, what many people would consider to be a good set of ethics would be honesty, respect, responsibility, fairness and care. Dishonest behaviour within business is destructive. It misleads business, it can lead to bad decisions, it can lead to ultimately to the closure of the business and the loss of jobs and the loss of income and misery for the people who previously worked there. So the principles of ethics, as caught up in these ideas of honesty, respect, responsibility, fairness and care, most people would go along with that and say, well, these are the principles upon which business should be based. The sources of ethics, well, that's difficult. It could be we get our values from our family line. We inherited them. Possible. It could be from religion. Some societies see themselves as highly religious and therefore will pass on the values of that religion to the children. But other peoples may not agree with that religion and may oppose the religious teachings of that particular point of view. Now, what I'm trying to say here is that religion is not universally accepted. We know there are religious conflicts around the world. So, as a source of ethics, it may not be a strong source of ethics. Philosophical systems, ways of thinking and tracing through the implications of different points of view related to ethics, that may be more productive. Unfortunately, it's also more complicated and requires proper study and detailed study. But philosophers throughout the period have looked at ethics and what is right and what is wrong, and looked at the various arguments of how we can assess what is good and what is bad. As for codes of conduct, well, a code of conduct is normally based on some set of principles, some ideas that are perhaps inherited or based on religion or based on past laws. But of course, these may be defective. It's not necessarily because they're based on codes of conduct coming from the past, it doesn't make them right. They may be not suitable for modern day business. And the legal system as well, well, that's based on the philosophical basis of the society, on religion, on what people have voted for, which have later on become law. But we also know that there are good laws and bad laws, and therefore the sources of ethics based on the legal system could also be very inappropriate, and perhaps more so over time. And also cultural experiences. Well, context with other cultures is a good thing. We can learn from other cultures, and hopefully other cultures could learn from us, and in this way we could pick up, if you like, best practice in other societies and use that as a basis of living in our own society. What comes across most from this set of sources of ethics is none of them seem to be very stable. We know that religion is opposed by other religions, and there are religious wars, and there has been throughout the last few thousand years. We know that philosophical systems contradict each other. We know that the evidence for genetics is not well established. It may or may not be true. Codes of conduct, these are normally based on some sort of experience from the past, and based on the feelings and the values of the people imposing the code of conduct, which of course in turn is based on some perhaps religious belief or on some cultural or ancient belief coming from the past. But as I said, because something comes from the past doesn't mean it's right. Could come from the past and be wrong. So we have a problem about looking at the sources of ethics to see where we should derive our values from. Now, business ethics, well, this is just business plus ethics equals business ethics. Business commonly referred to as a commercial activity aimed at a profit motive. That's what normally we consider business to be. So the first point here is that business is normally aimed at the profit motive. It's normally aimed to make money. Business ethics refers to moral principles and rules of conduct which are applied to the business. So in other words, how should the business conduct itself? Business ethics means conducting all aspects of the business and dealings with all stakeholders in an ethical manner. Except from the previous slide, we now know that an ethical manner is difficult to define. So we have an issue about what is meant by ethical behavior. But on this slide, what we've got is we've got an idea that business is established to make a profit. Now, many people would say businesses are established to meet customer needs. And that's a view held in marketing, for example. It's argued by others, some hardline economists, for example, that business is actually established to make a profit. And it makes a profit by satisfying customer needs, so the customers will buy the product. It'll have more sales and more profit. But if the business is there to make a profit, then how should it behave? Should it pollute the environment? Should it have bad working practices, dangerous working practices? How should it behave? How should it conduct itself? I mean, maximizing profit sounds like keeping costs to an absolute minimum. Well, keeping costs to a minimum, doing things the cheapest way, is not necessarily the best way for the people living near the factory or living near the company, or the people working in the company, or for that matter even the customers, because the products themselves will be poor quality and perhaps even dangerous. So there are issues. Some unethical practices. These could relate to customers. As I said, selling poor quality goods, some perhaps cheating as to the description of the product, saying that the product will do something when in fact it won't do it effectively. The government may also, the government could have unethical practices. It could be keeping secrets from the people and conducting all sorts of even experiments on the people without them knowing it. Generally speaking, governments are held to account, particularly in open democracies. It's easy to, well, not easy, but it's fair to say that eventually government secrets do come out. So governments tend to behave themselves better. After all, they want to be remembered in history as the good people. There could be unethical practices related to the community. The company may pollute the environment or congest the roads or have bad relationships with the community, be noisy, be dirty. So the community may suffer as a consequence of the business. The employees could also be affected by unethical practices. They could have dangerous working conditions or long hours of work, or even be cheated on their payments, on their wages and salaries. And finally, we could have unethical working practices associated with the economy. The company does not pay its full amount of tax towards the upkeep of the country. It cheats on its tax returns, or it exaggerates its importance within the community in order to get favours for planning and expansion, and it may even corrupt public officials by offering them bribes. So there are many sources of unethical practice that we can imagine. Now, the unethical behaviour could occur for many reasons. The first one, obviously, a lapse in individual ethics. Well, the individual may not have a lot of ethics to start. The ethics may be based on some ill-founded belief. So the individual may interpret the world in a way that doesn't fit with everyone else's interpretation. Having said that, that does not make the individual wrong, necessarily. Simply because someone thinks differently doesn't mean that they are wrong. There could be a ruthless pursuit of self-interest. In other words, the company pursues profit maximization no matter what the effects on anybody is. So it pursues, let's say, profit maximization, and it doesn't matter what the working conditions are or what the effects on the community is, or it just gets its head down and goes for profit maximization, let's say. So that could be a basis of unethical behavior. When people, not even businesses, when people pursue their own self-interests to the exclusion of everyone else, not taking other people into account. And it could be unethical behavior arises because of outside pressure. In extreme conditions, when, let's say, a country is under attack from outside, it may do things which are normally considered to be wrong. And it will try to justify those by saying, well, these were exceptional times. Companies, if they're under extreme competition or they have an issue, a problem with competition or with the view people have of the business, if they have a problem in general of this nature, then they may adopt practices which will try to get them out of this bind, out of this problem. They want to improve their image. They want to get rid of the extreme competition. So they may adopt some extreme measures. For example, they may increase hours of work. They may cut wages and salaries to become more competitive, to beat the competitors. To improve their image in the society, they may make donations to the local community. But these are only temporary measures to try and improve a temporary situation. So outside pressure is vague, but all businesses come under it. They're under the scrutiny of the regional government, the national government, the very local government. There may be a government just for that particular area, a layer of government for that particular area. And all of these people will be scrutinizing the behavior of the business. There may be pressure groups who are also scrutinizing it. So if it's trying to improve its image, it has to meet the requirements of many different points of view. And if it's trying to make the best of a highly competitive situation, whilst at the same time projecting a very nice image of itself, it may find itself in real difficulty. Perhaps it can't do both. Corporate governance. Well, structure may vary from country to country. The way government companies, as I should say, control themselves and control the immediate environment in which they operate may vary from place to place, from government to government, and from country to country, and so on. So they may vary over time. Under one government in a particular country, they're encouraged to do certain things, and under a different government in the same country, they're encouraged to do something slightly different. And between countries, they're also different. Generally speaking, there was a great emphasis to standardize on the American pattern of governance. So companies should govern themselves according to patterns that were worked out in America, broadly speaking. And the reason for that was because the Americans got there first. They got there and looked at the issues and looked at the problems and decided companies should behave themselves in certain ways, and other countries found it easiest to adopt those practices. Now, of course, we've got globalized capitalism with companies operating in different countries. For example, the Sony Corporation, a Japanese company, is now based right around the world. And it's possible to view each of the Sony businesses around the world as almost independent businesses. And which means that they are, it's difficult to control them. Governments would find it difficult. So governments, in a sense, don't even try. What they do is they lay down blanket rules which cover all the companies in the country, which would include Sony. But there's greater emphasis on self-governance, and probably the big pressure on globalized companies to behave themselves and to act in proper ways. The biggest pressure comes from their image. They don't want to hurt themselves. They don't want to be seen to be bad. And this imposes self-governance. There is also a substitution of government regulation of business for that of the market. The markets do impose discipline on businesses. If the business gets too arrogant and increases its price, the customers won't buy it. If there is a choice in the marketplace. If the companies get too arrogant and start to abuse the workforce, the image of that will be posted globally. It will damage the image of the company, and global sales may fall. But governments still have some power and some authority to intervene in corporate affairs. So the governments of the world may still make rules and regulations, and there may be international agreement between governments about how to control larger international companies. So there is still a great deal that the government can do. But corporate governance should ensure that managers effectively execute the strategy laid down by the board of directors. So the managers should effectively execute the strategy laid down by the board of directors, which means that the managers follow the edicts of the board of directors. And of course the board of directors therefore should follow what is acceptable behaviour within the country and perhaps even internationally, as I said earlier. There should be every effort to avoid fraud, deception and malpractices within the corporation. Fraud and deception and malpractices are not good, not seen to be good. So therefore the government tries to introduce laws and regulations that govern these and stops companies from engaging in them. And it should provide opportunities to shareholders to examine the functioning and true performance of the corporation. The whole idea of the final accounts of the business is to present a true and fair picture of the business. And the accountants, through their professional bodies, must ensure that the final accounts that are published for the business are accurate, true and fair. So there are checks and balances in the system to try and ensure that companies behave properly. So the principles of corporate governance seem to rest on fairness, accountability, responsibility and transparency. Fairness, that the company deals fairly with its employees and with its customers and with its suppliers. It does not attempt to cheat. It's accountable, that when it gets it right, it takes the credit, and when it gets it wrong, it compensates and apologizes. It's accountable, and also the facts and the figures relating to the business are reported accurately at the end of the year in a fair and open manner. And the business must be responsible when it makes decisions and there are adverse consequences as a consequence of the decisions. It must take responsibility for those. And its behaviour and its intentions must be transparent. It should show the world what it's intending to do, and it must, subject to normal commercial secrecy and not giving too much away to the rivals, it should be transparent, that if the wider world wants to see what working practices are like in the business, then show them, and show them openly, decently and honestly. Now, organisational stakeholders. Well, a corporate stakeholder is a party who affects or can be affected by the company's actions. So a corporate stakeholder is a party who affects or can be affected by the company's actions. This means that the stakeholder is perhaps an employee of the business, or a shareholder in the business, or a customer of the business. So the company's actions affect the stakeholder. To be effective, an organisation must at least minimally satisfy the interests of all the groups that have a stake in the organisation. So the organisation, the business, must address the needs of all its stakeholders. It must first of all identify all the stakeholders and then address their needs. There are many stakeholders in the business: customers, employees, suppliers, local community, society in general, strategic partners, the government, unions, the owners of the business. There are many of them, but each one will have requirements of the business, and the business should look to satisfying those requirements. Now, the types of stakeholders, well, there are two types: internal and external. The internal, the employees, the managers and the owners. And the external stakeholders, the suppliers, society, government, creditors, shareholders, customers. So we can see the stakeholders as being divided internally and externally. Well, the responsibilities and characteristics of stakeholders. Well, first of all, the owners and shareholders. The number of owners and the roles they carry out differ according to the size of the firm. This must be obvious. A small firm will have less owners than a big firm. A big firm, a big business will have many shareholders, for example. In small businesses, there may be only one owner, the sole trader, or perhaps a small number of partners, as in partnerships. In large firms, there are often thousands of shareholders who each own a small part of the business. So you look at the ordinary shares of the business. The ordinary shares are really the owners of the business, the ordinary shareholders. And there may be thousands of these, depending on the size of the business. The managers have a responsibility to organize, make decisions and plan and control, and they are accountable to the owners. So the managers must organize, make decisions and plan, control and so on. So that's what the managers do. The employees, well, a business needs staff or employees to carry out its activities. If it doesn't have staff or employees, nothing will happen. The employees agree to work a certain number of hours in return for a wage or salary. Pay levels vary with skills, qualifications, I should say, age, location, types of work, and industry and other factors. But the employees have a responsibility to work fairly and honestly in return for an agreed wage or salary. The customers, well, customers buy the goods or services produced by the firm. They may be individuals or other businesses. It depends on the type of product. Firms must understand and meet the needs of their customers, otherwise they will fail to make a profit, or indeed they may fail to survive. So the customers are important to the business, and the business must recognize the customers and deal with the customers fairly. The suppliers, well, firms get resources they need to produce the goods and services from suppliers. So suppliers supply the raw materials or the finished process or the partly processed goods or whatever they are. Suppliers are important. It's part of the supply chain. Business should have an effective relationship with their suppliers in order to get quality resources at reasonable prices. It's a two-way process. Suppliers depend on firms that they supply, and the firm depends on the suppliers. So the suppliers depend on the firms, and the firms depend on the suppliers. And there's sort of a mutuality there. They must recognize each other. So there is a set of responsibilities associated with suppliers. The community, Well, firms and the communities they exist in are also in a two-way relationship. The local community may often provide many of the firm's staff and customers. The business often supplies goods and services vital to the local area. So both benefit. People in the local community may work in the business, but the business may supply goods and services that the local community require. So there's a possible two-way interrelationship between the local community and the business. The government. Well, economic policies affect firms' costs through taxation and interest rates. So the government affects the business. Legislation relates or regulates what businesses can do in areas such as the environment and occupational safety and health. Successful firms are good for governments as they create wealth and employment. So there is an interrelationship between the business and the government. Ethics and stakeholder theory. Well, maximize stakeholder value, develop ethical responsible behavior of managers. That's a view. Maximize stakeholder value. Managerial decisions should also reflect ethical responsibilities, distribution of benefits and allocations of costs in a manner that is considered right just by the stakeholders. So what we need to look at here is it the function of the business to maximize stakeholder value? Well, it depends on the power and influence of the different sets of stakeholders. The local community, for example, may not want a large polluting business, but the owners may, because it will lead to more profits and better return on the assets. So there is a possibility of conflict between the stakeholders. And as for managerial decisions, the second point, should they reflect ethical responsibilities? Or should they just simply be concentrated on producing the good as efficiently as possible, cutting costs and contributing towards the net value of the business? Is it the function of managers to take the wider community, the wider set of stakeholders into account? Or do managers focus entirely on the production process, on the efficiency of the business, and try to make the business compete as effectively as possible? In other words, what is the function of management? Should management be looking at the ethical issues, or should management simply go in to maximize the value of the business, create a profit, and create the biggest net worth that they can for the business? If they don't do that, the business may experience competition, and eventually the business will die, perhaps losing jobs, losing all of the benefits that the business did bring to the local community as well. People's livelihoods have been lost. So there is a tension. Should the business take all of the wider objectives, the stakeholder objectives, into account, or should it just simply focus on producing sufficient output of a standard and quality and cost that enables it to succeed in the marketplace, and in that way sustain itself and sustain the jobs that it creates also? there are different concerns that the stakeholders that have. Owners and investors, for example, they would be interested in the financial soundness of the business and consistency in meeting shareholder expectations. There's also sustained profitability as an issue. If the business is fluctuating wildly, it doesn't look good. And the financial information should be delivered on time and should be done according to proper accounting standards. So that's what the owners and investors would like to see. The customers, well, they would like to see a product of good quality and innovativeness and availability. It should be there when they want it. Responsible management of defective and harmful products. If the products are harmful or defective, there should be good aftercare service and issues should be dealt with in an efficient manner. Safety records for products and services should also be made available so people can judge how successful the business is in making and delivering certain products. The pricing policies and practices should also be easy to understand, and it should also be competitive with what other companies are producing. And the advertising of the business should be honest and accurate and responsible. No point in making claims in advertisements that can't be met in reality. The employees, well, there should be non-discriminatory, merit-based hiring and promotion. People should get jobs on their ability. Having said that, when the chairman of the business or the CEO of the business is retiring, there may be an opportunity for his or her son to or daughter to inherit the position. It's always the case. But strictly speaking, there should be non-discriminatory, merit-based hiring and promotion. Wage and salary levels should be equitable. It should be fair. It should be fair according to gender. Men and women should, for equal work, should get the same pay. That's reasonable. There shouldn't be discrimination in the workplace. There should be access to training and development so that the workers are involved in the business and they relate to the business. They feel a part of it because they are being developed within the business. And the workplace should be safe, and safe from injury within the work itself, and safe just as a place to go. As for society, the environment should be thought about in terms of packaging and product design. Perhaps it doesn't need all the packaging that it gets. And there should be every effort to recycle and reuse materials and prevent pollution, if possible. And look to what is deemed to be good practice globally and try to adopt what is good practice so as to minimize its carbon footprint, minimize its impact on the globe. So environmental concerns are a big issue and an increasing issue confronting businesses. The community part of the society section, well, what contributions does the business make to the local community? Perhaps sponsorship of certain programs or donations to good events and good work. So the local community may have an event to raise money for for the local hospital. Perhaps the business will have an opportunity to sponsor the event or look to making a contribution. How does it organize its working practices? For example, does it facilitate flexible working which will enable parents to look after their children out of school hours? What sort of product donations can it make? In other words, can it give some of its output perhaps to a needy cause? Depends on what type of output it has. Or can it give the sales of a certain proportion of its output to needy causes? How does it relate to other facilities and other assets for the community? For example, how does it relate to proposals to build a local swimming pool or improve the local school? Can it make some contribution? Just to show the local community that it cares, it's a part of that community. So in this session we've talked about wider aspects of the business. The basis for all of this discussion, as I said right at the start, is complex, because we don't know where we get these principles from. They seem to be just passed down from generation to generation. We can't say they're based entirely on religion, because, as I said earlier, there are religious wars. Religions oppose each other. They fight, which means some of them are different to others. We can't say we get them from history or from custom and practice, because custom and practice may have been bad. Our ancestors lived in ways in which we would perhaps not approve. So what we need to do is to try and interpret business behavior today according to some set of values that we have today, and try and get a consensus or a near consensus about whether that business is good or bad as viewed through whatever lens we've developed for looking at businesses today. It's a complicated issue, but it's important that we at least widen out the function of business from making profits only, and from all of the efficiency material that we look at in other modules. This time we have a chance to look at the wider view of business, and to try and just write down some of the impacts and some of the issues that may impinge on business in the more modern world in which we live. That's all I'm going to do in this session, so I'm going to leave it at that and say thank you for watching.